Hello, I'm Chad Spearman with the CattleFax Closing Bell. New crop corn supplies are expected to rise sharply assuming favorable growing conditions prevail this summer, which would drive new crop corn prices lower in the months ahead. U.S. corn plantings are expected to total 95.9 million acres, rising to the highest level in 75 years and increasing 4 million acres compared to 2011. Increased corn acres, along with the brisk planting pace, are setting the stage for a sharp increase in U.S. corn supplies for the 2012-2013 corn marketing year. Projected stocks-to-use levels are likely to improve to between 9 and 12%, a substantial increase compared to the levels realized over the past several months, ranging from a mere 5.2 to 6.8%. The USDA will release the first official new crop estimate on May 10th. Historically, December corn futures tend to reach their annual highs between May and July amid peak production concerns. Once the acreage and planting concerns are abated, the market tends to trend lower into the glut of harvest unless hot and dry conditions in the summer threaten the crop. This analysis looks at the timing of the December corn futures market lows that occur between the months of June and December. Over the past 32 years, since 1980, the weekly December corn futures lows have occurred between June and September 17 times. The lows have occurred between October and December 15 times. If new crop stocks-to-use levels rise to 9 to 12%, December corn futures are expected to have risk down to the $4.75 to $4.85 per bushel range in the months ahead. Fed cattle prices were fully steady to slightly higher this week, with the higher values in the north on a dressed basis. Trade volumes were light to moderate. Sales in the south occurred at mostly $122 per hundredweight, with the top end at $122.50. The north traded live cattle at $122 to $123.50, and dress trade ranged from $192 to $197 per hundredweight. Feeder cattle prices were steady to $4 higher for the week, while calf prices were relatively uneven. Average weekly calf prices were steady but ranged from $2 lower to $2 higher. The prices reversed the trend established in recent weeks. Stability in the futures market also helped reverse the price slide. Slaughter cow values were steady for most of the week. Wholesale beef prices were even for select boxes and modestly lower for choice. Demand is yet to improve for grilling items, delaying the seasonal price rally for choice product. Corn prices moved lower for the week as the latest USDA corn production report indicated a larger carryover than the trade was expecting. Looking ahead, the fed cattle market still faces significant short-term price risk. There's a tremendous gap between fed cattle prices and carcass cutout values, creating negative packer margins. Increasing fed supplies moving into the summer will shift leverage from the feeding to packing sector, adding pressure to fed cattle prices. The beef complex is expected to trade higher next week, which will be supportive. Expect the fed cattle market to trade near $100.22 per hundredweight. Demand for feeder cattle improved as deferred live cattle futures and short-term supply concerns provided some price support. Feeder cattle prices will likely be steady to $2 higher next week. Demand for calves is weakening seasonally, and prices should remain choppy next week. Expect calf values to be mostly steady to $2 lower. Wholesale buyers purchased beef in volume on the spot market late this week. Sales inquiries largely focused on securing spring grilling items as well as product for advertising specials. Prices have declined $20 since the recent highs. However, current inventories are low and additional buyers could enter the market if higher prices are supported by limited product availability. Expect choice boxes to trade between $176 and $180 per hundredweight, with select boxes trading at about $1 to $2 less. Corn prices on the spot futures market have given up 30 cents per bushel in the last week. The $6 to $6.75 per bushel trading range still stands for old crop corn. However, current fundamental and technical analysis suggests prices may threaten the lower end of that trading range next week. Thanks for watching, and remember to visit CattleFax.com to become a member and receive the latest market news and analysis.
The beef business has never been for the faint of heart. For more than 40 years, CattleFax has led the way. We're the time-proven leader in research, analysis, and information, equipped with the industry's most powerful database. Become a member at CattleFax.com.